Hello, every one of you. This is your very own Mr. Cloud Oleka. Today I just want to make you all understand something very important, and this is just how whales think and how whales trade. You understand the way a whale trade and a whale think is different from how you trade. This is one thing you should understand in crypto is that when you lose money, that money is given to someone who made the right decision. So for whatever wrong decision you make in crypto, you are definitely enriching someone. Whatever money you blow off in crypto, you're definitely making someone scream, wow, I just got it. I just got it. So that's one thing with crypto. So what you should understand is that your gain is another loss and your loss is another gain. So it's best you understand exactly everything you're doing. So first thing first, we have to understand who are the whales, because when you understand who a whale is, well, you would know exactly what you're doing and how to be very careful. So it's better you trade like a whale, and definitely you would stand to lose nothing. The truth is you might not really get to make much money because of your size, but definitely if you are consistent enough, you will definitely see more wins than losses. So this is what I want you all to understand. This is what I want you all to do for me. I want you to subscribe, share, like, turn on your post notifications so whenever I post any video, you get to see it first. You understand? You get to watch it, you get to understand it. Because for whatever video I post, I make sure I drop something that will definitely help you understand exactly what you're doing. So today we'll be going on how do whales think and how to trade like a whale. It's very important and it's a very simple teaching. It's not going to be highly complicated or never. It's just going to be very simple. I'm going to make it the way each and every one of you will understand it and be able to trade with it and definitely see something good for yourself. So now, what is a whale? A whale is someone who has large size. Large size. If for example now you have like over 1,000 BTC now in your wallet and you have it in your Binance exchange account, you are a whale, because you're selling off of that 1,000 or pumping in of that 1,000 will definitely boost the price of Bitcoin. So now this is what you should understand. Look at this place. You would see that the green is always the buyers, the red is the sellers. So when you're seeing green like this, it shows that the buy pressure is very high. When you're seeing this kind of green, it shows the buy pressure is high. So when you're seeing, we've not really had a sell pressure, it's not really been like massive. Okay, look at this place. You would see that at this spot, you would notice that the sell pressure here is very high. But one of the things you should understand is this is a secret of market. This is a secret of trading. Whenever there is a dump, there's definitely going to be a pump, which is whatever comes down must go up. So if it's gone up, come down, it's still going to come down. If maybe you met BTC at this place and you're crying, oh, should I go in? This is 56, 8 to 9 thousand dollars. Should I buy now? Oh, whoa. But if you had waited, you see, you would still get an entry here at a very low price. So this is one of the things I tell people. You should be ready to learn before you earn. If you're not ready to learn before you earn, then definitely you're not ready to make money from crypto. Crypto is highly profitable. Whether for stocks, it's highly profitable. But first, you need to understand this. So I'm just trying to make you all understand what. Okay, I'm not trading with this, so I'm going to remove this. I'm not using the EMA for analysis. So sorry, the MACD for analysis. So this is what you should do. So if you follow my lead, definitely you would not make mistakes. And if you trade like a whale, most of you are trading against the whales. And you should understand that this is a market that deals with demand and supply. Demand and supply is what controls the market. If there is a buy pressure, it's simply telling you that people are buying too much. So what does it mean? If they are buying, what are they buying for? They are definitely buying to sell off. So when they sell off, they make profit from those people who are buying at that high price. So that's why if you've chatted me up and tell me, hey Mr. Cloud, Bitcoin is this, I want to buy. What will I tell you? I will tell you, do not buy. I will tell you what, wait. Wait for a dip. The price is definitely, it must come down. Even if we check a BNB, we'll realize that even when BNB tested, I should have it in my watch list, wait. Even when BNB tested 400 and something, it still went down. Okay, now BNB now is 444. You see, so even when it tested here at this highs, it still came down to this price. So these are all entry price. So if you notice, Binance is just pumping and pumping and pumping its BNB because of the use case. This is one thing you all understand. Most of you don't know this. So I'm going back to BTC. So now, how do whales think? How do they trade, and uh, how do they want to make money off your mistake? This is what a whale do. A whale is aware of this thing. What is he aware of is that if he pumps in money into the market, the price is definitely going to go high. You understand? For this coin, for this asset to close at this level and pump up to this place, it shows that the buy pressure became very high at this level. What does it mean? It means that somebody actually did something. Somebody actually pumped money, or people are buying. So whenever you see green candles, large green candles, it shows that people are buying. And if, for instance, you didn't buy before the large green candles appear, it shows that you are buying when people will start selling. That's why most of you close your trades in losses. Most of you close your position in losses. Most of you invest and you lose. Why? Is because you are buying when they are selling. That is why it's good you understand this market. You understand this candlestick. Whenever I see large green candles, I don't cry, I don't panic, I don't feel sad if I missed the opportunity. Why? Is because I know a dump is going to happen, an entry confirmation again is going to happen, and I can still enter back that trade again. Just like this. If you notice, look at this red dot. If you notice, you would see that the buy pressure, the sell pressure was getting intense here. You see for like how many minutes? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. This is 11 candles of the 15 minutes time frame. So 15 minutes times 11 will tell you like in 1 hour, 2 hours, and over 3 hours the sellers were controlling the market. What now happened? A reversal confirmation. After this, you see what happened. The price went back higher. So you don't have to rush the market if you miss any opportunity. And now for you to trade and think like a whale, you need to understand that when the market is pumped, do not buy. When the market is dumped, only look for an opportunity to buy. When the market is pumped, only look for an opportunity to sell. But I do not advise people to short crypto, because crypto are assets owned by people, unlike the USD Canadian pair, whatever, USD Japanese yen. These are not assets, these are currencies. You understand, owned by the central government of whatever country and everything. So when you understand this, you would know that you are not supposed to buy when there is a pump. You are not supposed to start selling after a dump and then maybe a reversal confirmation. Just imagine you saw this dump and at this place, this closing green, you say, oh, you're going to short the market because it's still going to come down. What's giving you a confirmation that it's going to continue? It could continue based on my mind told me. You understand? So this is what I want you all to understand. This is very easy topic. Very easy topic. Very easy. So you just have to think like a whale. Your target in this is you just want to make money. So one of the things that a whale will not do is whales do not use leverage. You understand? So those of you using 10x leverage, 5x leverage, 20x leverage, you're using leverage because you want, when it's a small move, you could at least be getting 10, 5, 3% of your money because of your size. So for you to trade like a whale, this is one of the things. Do not use leverage. A whale do not use leverage. So if you're using leverage, you are not a whale. So when you're using leverage, you need to be very careful. Why should you be careful? Is that the whale can crash the market on you or pump the market on you, and you are going to regret why you even made that trade or go into that market. So whales do not use leverage. Anyone you see using leverage is not a whale, because imagine you're using $1 million to go into trade. Even with $1 million, you're not yet a whale. But let's say it depends on the currency. But in Bitcoin now, let's say you're using $50 million to trade. You understand? You would not want to use leverage, because if you use 10x leverage, just 1% move will definitely cost you 10% of your asset, which is you will lose $5 million just by making a wrong move, just by going down to 1 to 10% loss. You understand? So whales do not use leverage. One of the importance of not using leverage is this. If a market is to crash, let me show you all something. Let me just draw my support and resistance. This is more like a tradition. I always ensure I draw my support and resistance on any chart. So it depends on which I want to use. So I want to use here. to draw my resistance. So let me go here, use here for my support. You understand? So this is just what you should look at for. This is one thing that a whale would do, and most of you do not know about this. Okay, yeah, this is what I want you all to understand, because most of you do not know this. Number one thing is a whale would never trade using a leverage, because you do not know that. Let's use here for instance. Look at this now. Go to your rule. Look at this. You click up. Let's go to 1%. You see, this is going to give a whale just 1%. But you now on a 10x leverage, this is going to give you 10%. You on a 100x leverage, this is going to give you 100% of your investments. So now, what is a whale looking at for? A whale is looking at for, if I am going to close or leave this trade, there should be a break in the market structure, which you using leverage will use, a whale to use. So a whale would set his stop loss. His entry was above here, which is he was trading the breakout, and his stop loss would be somewhere here. Let's use a round number, somewhere here. So now this is 0.20. So a whale now could be using $1 million to go into this trade. So now let's see like this now. $1 million now into this trade, 0.2% will be what? 1% is $10,000. That means this minus 0.2 will be $2,000. That is what he'll be losing in one trade. But if this trade goes just the way he planned or he imagined, that means he would be making at least over 1%. So here's the thing you do not know. A whale do not use leverage. Why don't they use leverage? Their size is already their leverage. A whale will hardly blow off his account. So when you have the mindset of a whale, you will not make much money. Why? It's because your size is not large. But the truth is, you will not blow off your account, because even if you go into a trade and there is a break in the market structure, it's not going to affect you much. Let's say you're going into this trade now with 100,000 naira, and you set your stop loss to be somewhere here, which is a break in market structure. So this will be 0.2, which means you are going to lose 2,000 naira. Okay, 1% of 100,000 is 1,000 naira. So which means in this trade now, if this trade goes wrong, yeah, you're going to lose 0.2% of 100,000. I'm not very good in math. Okay, sorry, I had to do this calculation. I'm not really good in maths. So 0.2% of 100,000 is 200 naira. So which means in this trade with your 100,000 naira, if this trade goes against you and you see this break in market structure, what happens? You lose just 200 naira of your account. So if you're trading with 100k, a break in market structure, you will lose $200, 200 naira. But this now you would make 1,000 naira. You see, this is now, let me show you. This is 1 point. Let's assume you're going to make 1,000 naira, no leverage. You understand? So if you're trading like this, if you're trading like a whale, you will make money. But the fact is, your money would not be large. But if you are consistent, following a strategy, going out of trade once there is a break in market structure, or once you see a reversal confirmation of your taking position, then you can close. Going like this with your 100k, you can build your account double the size in a month, or half the size, which means with 100k you could get 50,000 naira extra in a month. Why? Is because you're not using leverage. And now for this trade to go against you and hit to this price and touch your stop loss, you know what you're losing is just 200 naira with the charge. Maybe you're losing just about 500 to 800 naira in one trade because you are not using leverage. The reason why Binance charge you a lot for commission for entry and exits is because you are using leverage. So whales do not use leverage. Why? Is because their size is their leverage. Their size is their strength. So for you to trade like a whale, you need to, number one, avoid using leverage. Leverage will definitely give you a boost in your money and everything, but when you're going to blow your account, nobody will be there to cry for you, to weep for you, to feel very sad for you. So another way again that a whale What will a whale do? How do whales do? First thing I told you is that whales do not use leverage. This is the number one thing you should know. So if you're trading with large size, you're trading with 1 million, and you can, with 1 million, you can be making at least 50,000 to 20,000 naira daily. And if you can be consistent in making at least 10,000 naira daily, and you would realize that in a month you've made over 300 to 400,000 with your 1 million. So the number one thing is whales do not use leverage. And this is one of the things you should understand again. Whales will always leave the market once there is a reversal confirmation of their taking position. Let's say now I was long on this trade and this trade gets to this price. As a professional that I am, top professional. So let me do something. So look at this now. You would realize that this now is a reversal confirmation. The uptrend might continue, but as a whale, you've been like, okay, I've gotten 1%, 2%, and this is a very powerful confirmation that this might end because this might end, and it might come down. Okay, no problem. He can decide to close after this candle close. You understand? If he decides to do that, he has definitely made let's say he definitely made over 0.8% of his size, which means he closed in profit. I would always tell you all this: 1% win in trading is better than 1% loss in trading. So a whale is not out to make 10% because a whale knows that his leverage is his size, and if he decides to wait. So that was what I was saying. A whale's leverage is his size. That's what gives him the confidence. So you are using leverage because you're not using large size. What the hell just happened? Can you imagine? This dump is mad. This is why I told you all now. Whales are after little profit and not after, oh, we have to wait till it gets here, and you understand. So this is crazy. Can you imagine? This dump is smart. I was just on this and I just saw this happen. This is like, wow. If you're using 10x leverage, it's like using 10% away. So I said first thing is whales do not use leverage. Second thing is whales do not wait to get 100%. No, whales are after making 1% or 2% at most, or 3%, and if they are lucky, 5% a day. So imagine a whale using $1 million to trade, and he's making like $100,000, let's say $50,000 to $100,000 daily. That means in just about 10 days, he has definitely made back his $1 million, and the rest of the profit is just added. You understand? That is just what a whale is. So you have to learn how to think like a whale. So now, how do you think like a whale and how do you trade like a whale? First thing said first is, since you're not a whale, you have to maintain a size. You have to maintain a leverage, which is you have to try to use two leverage. You have to always try to use at least at most 2x leverage. Why is it? Why are you using 2x leverage? So if a whale is getting 1%, you're getting 2%, you're out of the trade. So now you have to be very careful. You have to at least let your size be meaningful. Let's say you're using like 1,500,000. Fine. Use. So I'm so sorry for the distraction. So this is what you should do. So now use at least 2x leverage at most, and you should exit a trade whenever there is a break in market structure. Remember this: not all trades will be successful, but if you can handle your big losses, you're definitely going to be a profitable trader. But if you cannot handle your big losses, just be rest assured that your family and friends are going to be the one to give you money to feed. So you have to be careful so you don't blow off your account. So if you're using a size, maybe to you 100,000 naira is a big size. Remember, this size is a mindset. It's a mindset and based on capability. Maybe to you now, what you call a big size is 1 million. To me, I call large size from 100 million, 1 billion. You see, there are people that large size is from 1 trillion, 500 billion. There are people that trade with much more money than you can ever imagine. You understand, the pumpers and dumpers of the markets. So now, whatever your size is, just know that the size you're using to go into trade, even if you can be making 2% per trade or 1% per trade, at least be rest assured that if you go into 5 trades a day, 5% of that size would be able to solve your needs. You understand? So that way you will not blow off account, you will not make mistakes, you will not lose money, you will not lose too much, because the more leverage you use, the higher the charges you pay. If you think I'm lying, if you think Mr. Cloud is just talking, because I know most of you already know than me. So if you think Mr. Cloud is talking, what you just have to do is do this for me. Fund your Binance account with $1. Remove every of your size there. Use $100 and go into trade and try to close immediately and see the charge. Use use a $1. Use $1. $1. Don't use $100. Use $1 and go into trade and use 100x leverage and see the charge. Use that same $1 and go into trade and use the 1x leverage or 2x leverage and see the charge. So the Binance is charging you high for your entry and exit because of the leverage size you're using. Just like if you're in sports, those of you doing sport trading, you realize that when you're selling off your assets, you are not losing much. The fees are not really reasonable. You understand? So this is how whales trade. This is how whales think. This is how they want to make their money. So if you're a wise person, you will trade like this. Do not use high leverage. Most of you who always say forex is volatile, forex is this than this than this, it's not true. It's because of the leverage you are using. Most of you are using 5:1. Most of you are using 1:500, using 1:50, 1:100, and you don't even know the ratio, the leverage you're using, and you're blowing off your account. You end up saying crypto is this, is dull, forex is this. There are people who are trading forex that don't even use leverage to trade. Why? It's because of their size, because they're using large size. So the first thing first is to get a size that to you is considered a large size. So which is, if you're making 5% of that size daily, you are comfortable. 10% of that size daily, you're comfortable. 20% of that size daily, you're comfortable. Consistency. Leaving the market when there's a break in market structure, knowing where to set your stop loss, knowing how to exit the trade, knowing what and what to do. This will make you a very, very profitable trader. So that is how whales think. This is how whales trade, and this is how you should think. So using leverage is not a whale's pattern of trading. Waiting to get 100%, 50% in a trade is not a whale's pattern of trading, because whales do not use small size. They use large amount of money, so they cannot be that patient enough to wait that long. Okay, so make sure you subscribe, make sure you like. If you have question on this topic, you can ask me. I remain your very own Mr. Cloud Oleka. Thank you.